Struggling to time your trades perfectly? In this video, I'm going to break down exactly how to enter and exit like a pro using a simple 1-minute scalping strategy. I'm going to give you the clear entry confirmations or limit orders and price action concepts that actually work here. Let's get into it. Let's get into the 3 different types of entries. We have our limit orders where we're setting them up, right? In MEXC or Axiom Pro, where you can set in your price, set in your quantity, and just let it run. Same with the exit price setter. This would be considered more of a aggressive approach, right? Because we don't know what the chart is going to do next. Could be a complete fake out and just turn to the downside or the upside, depending on if we're taking longs or shorts. So limit orders here would be the most aggressive. You are getting in at the best price. However, it could be a complete fake out and you may take some unnecessary losses here. So the next one is strong price action. And this is a more conservative approach we will get into, meaning you're waiting for some candle closures to take place at some resistance or support levels here. And the third one here that we're going to cover is the confirmation or the most conservative way to take your entries. So this one you are going to see where you're waiting for a couple of candle closures on the 1-minute time frame to really confirm what direction we are going with the trend here. So now we will get into the pros and cons of each. It really depends on the type of trader you want to be. So me personally, I have tried limit orders a lot in my past. Usually equates to more losses. Strong price action, it's middle ground criteria here. And then the confirmation, you're probably going to have a little bit higher win rate. So if we look at some textbook examples first, and then we will also go over some live trades and the strategy to take place with this for each one of these, depending on how you want to enter and exit trades. But if we take a look, here would be considered a limit order where you could be faked out on, right? Maybe we put our limit order right here and it just ends up turning to the downside, hitting our stop loss, stopping us out. Where here is a retest area with these green lines here. Maybe we're waiting for some type of confirmation. We have a hammer candlestick here wicking through this resistance level that turned support and it's on its way back up. So this would be reading the price action a little bit more as opposed to just throwing in your limit orders and kind of letting it do whatever it does. For the first example here, just an easy textbook example to look at. Obviously, stuff is going to look a little bit more messy on the charts, right? But this is all things you guys need to get used to reading here. So here we would place our limit buy order at this support level that used to be resistance. So here's our kind of general support. We would throw that into MEXC or Axiom, whatever kind of platform, maybe Blofin, Phemex, whatever platform you're using. Put your price in, put your quantity. You set your target price either at top or maybe a 1.272 level, and you're putting your stop loss just below the last swing low level. So this would be considered a limit order setup here. So the pros with this is you're going to get in pretty much every time here. You are going to get the best possible entry, right? You're probably going to get the lowest price. It's probably going to hit more times than not. And you're going to gain the highest risk to reward ratio because you're getting in at the lowest possible price that you think the chart is going to hit at. So the cons with limit orders here is something to pay attention to is you are probably going to have a lower win rate, right? Because you don't know what is going to happen next after your price and your quantity is triggered into that order. It could be a complete fake out and maybe the candlestick patterns are showing more bearish than bullish. Number 2 here, as I just mentioned, you're prone to fake outs and you may take some unnecessary losses because we aren't confirming, what the next candlestick is going to do. So the next one we're going to cover here is strong price action. So this one is a little bit more on the conservative side. We are still looking at a possible resistance turn support area and looking for that retest. So a lot of times you'll see this on a chart and the candlesticks will wick nicely through this. I cover the orb strategy in a couple of my videos for trading perpetual futures. You can see the same things on other charts as well if you're looking for support and resistance levels. So there will usually be support and resistance, and those are usually the areas you're looking to enter on. So you see, we got some wicks down into this resistance turn support level. So our buy order is not where that limit order was at that actual support level, but it's moved up slightly because we have a little bit more of a confirmation. We got a wick down into this, and then we got a little green candle up, signaling we could enter a possible buy order here. So you're not getting in at the best possible price like the limit order. However, this could be considered more conservative because you are waiting for an additional candle close here. And you do whatever time frame you're playing on, 5 second, 15 second, 1 minute, 5 minute, 15 minute, you do need to wait for those candle closures in order to confirm if you should take that trade. So I know some people like to play on the 5 minute, 15 minute. I'm more of a 1 minute player here, and I will actually cover the 1 minute scalping strategy as well as confirmation orders and everything on actual trading charts. But you'll see here's our buy order. It's a little higher than our limit order was. And our stop loss, we're going to actually move our stop loss. So instead of being below the swing low like our limit order was, right? Our stop loss was below the swing low here. We're actually going to move our stop loss a little bit tighter above this area here. So that way we are meeting our risk reward ratio criteria. So the pros to the strong price action or more conservative way of trading are you are actually waiting for buyers to step in, right? We're waiting for a green candle closure here if we're taking a long, for instance, for buyers to step in, confirming that this is an actual support level and it's not just going to cut right through. The second pro is your risk amount is close below the swing low. So we're not aiming for our stop loss down here where we're going to lose a lot of our risk to reward ratio. We're actually aiming for our stop loss down here where our risk reward ratio will be fine if we meet this top, because you're usually aiming for at least a 2-to-1 risk reward ratio, meaning if we put in $100, we want to get $200 out of that trade. Because if we're aiming for a 50% win rate, which is typical of most traders, that will make you a profitable trader. I do cover how to grow a trading account using risk reward ratios in my video above if you guys do want to check it out. So the third pro, once again, our risk reward is still good because we have moved our stop loss below this next swing low supposed area as opposed to the swing low. As for cons, we're probably going to have a medium win rate, right about that 50% range. We can still be prone to fake outs and we can still take those unnecessary losses just like the limit orders. So if we got these wicks down into the support area, but maybe this green candle was just a kind of little bit of a fake move up, and then we get another bearish candle downward, that would be prone to those fake outs or taking those unnecessary losses. So our next strategy for entry is confirmation or the most conservative level. This means we are waiting for 3 candle closures, not 0, not 1 or 2, but 3 candle closures depending on what time frame you are playing on. So this could be the 5 second, 15 second, 1 minute, 5 minute, 15 minute, 1 hour, whatever it is, you need to wait for those candle closures at the confirmation level here. You'll see we wicked right down into our support area again. We got a little bit of a bullish candle, and then we got a bullish candle actually overtaking this area, signaling that this could be a stronger bullish momentum uptrend that we're getting because this bullish candle overtook these 2 candles. So now your buy order, of course, is just a little bit higher than it was on the price action or the limit orders. You're all the way up here now instead of down with this candle or down at your support level. So you're not getting the best buy order area at the best price, but our stop loss yet again is still going to be right below this kind of swing low that's being newly created here. So here's our buy order and then your target profit. Aim for that 2-to-1 where we're putting in $100. Hopefully getting 200 out of the trade. It does not need to be exact every time. Sometimes it might be, if we're playing with the 1.272 or 1.618 levels that I go over a lot in my videos for target profits, it may be around 1.5, 1.7, 1.8 range. So as long as we're getting close to that 2-to-1, that is what we are usually aiming for here. So confirmation pros, you're going to have a higher win rate because we are waiting for 3 candle closures. We're confirming that this uptrend is actually happening, not a false breakout where we're going to just get a complete downtrend again. So you may have a higher win rate, anywhere from the 60%, 70%, maybe even 80% range. Your risk, once again, you're not moving below this swing low like you would on a limit order. We're just going to be below this next swing low that's being created here. And this is actually going to give you the shortest time in a trade. So instead of waiting for your limit order to take off, it might fumble around, maybe consolidate around here and slowly go up. But this will give you the least amount of time in a trade because after you get this candle closure, especially if it's more bullish candle, it can just shoot up on you. So confirmation cons, you are probably going to have a lower risk to reward. Like I said, you may only be hitting that 1.5, 1.7, 1.8. Sometimes you may miss the trade. So a lot of times this trade can just shoot up without you. You know, maybe this bullish candlestick didn't end here. Maybe it was a big bullish candlestick and just shot up right away. And you maybe have to wait for a pullback then yet again. You may get a ton of little bullish candlesticks as well, just kind of shooting up on the 1 minute time frame. So that would be considered sometimes missing that trade there. And buying after the candle. So you are buying after that candle closure there, meaning you're not getting the best price as opposed to this price down here, right? You're not getting the lowest price order amount that you would like to. You're paying a higher price and hopefully shooting for a higher target profit area. So now the question becomes, when are we going to be more aggressive versus least aggressive here? So when you are trading, you can take all these factors into consideration, or you can really simplify it down for yourself. Maybe try each one of these out and see which one you prefer. I know with the confirmation trading, it may be better for your trading psychology, right? Because you're having a higher win rate. You're confirming your trades, which makes you feel good. Humans don't want to be losers. We want to win. So this is probably better overall for your trading psychology, where the price action one is probably more middle of the ground criteria. And then the limit orders, while you may have less of a high win rate, you will be getting the best price in. So when you can be aggressive with the actual limit orders are A+ setups. So this would be a clear high time frame setup. So maybe there's something indicating to you on the 15-minute, 1 hour, daily chart, whatever it may be, that you are for sure know that this chart is going up. There's no question in your mind. So you can set up a limit order that way. This would also be considered A+ setup. So A+ strategies, all your confluences are coming together or are in place, whether it's divergences, changes of character, breaks of structure, any one of those things that helps you confirm, like really confirm a trade, that would be considered an A+ setup. The other thing is you don't want to miss a trade. If you hate missing trades, limit orders might be for you. I used to be that way. If I miss a trade, I could care less at the moment. I know there will be more trades in my day. So if I miss a trade, it's not going to be a big deal. So when to not be aggressive with these limit orders? A lot of times it's going to be the I don't know scenario. I don't know which way the market's heading. Like you don't have a clear setup in your mind. You're like, this could go down, this could go up. I don't know. If you're saying I don't know to yourself, probably don't set a limit order, okay? It's not clear in your head or anything like that. As for ranges and consolidation, I try not to even touch. If we're ranging or consolidating, a lot of times the market will stop you out back and forth. You're going to be like, I think I should take a long. I think I should take a short. And it's just going back and forth, ranging and consolidating in that area. So a lot of times you don't want to be placing limit orders there. No displacement. What do I mean by displacement? A strong bullish candlestick from a break and retest area that indicates that we should be taking an order here. So if we're not getting a strong enough bullish candlestick on the 5-minute time frame with the opening range breakout strategy on 1 minute scalping, then we probably don't want to be taking a limit order because we didn't have strong enough displacement. It's not a clear enough breakout from that opening range breakout or from another retest area. Let's take a look at some quick examples on the chart on how this would play out. So you'll notice here, I marked our 5-minute opening range breakout, which I use as a confluence with my Fibonacci and fair value gaps. So those are my 3 kind of major confluences. I do look at the RSI as well, but that's pretty much it. And if we go ahead and play this out, I'm usually marking the 5-minute opening range breakout from 8:30 a.m. Central or PM. If you're trading Asia time, you can try London as well. I'm just asleep during that time, so I have no idea. But here's 8:30, all these candles here, 1, 2, 3, 4, 5, 6, and we're waiting for this candle closure. So if we get a decent displacement or break through this opening range breakout, we can more than likely look for a long trade because we got a good breakthrough on this candle. Now, the other things to note here, we are currently making a change of character, right? We're coming past this high here, which can sometimes signal a reversal, especially if we're getting farther in this trend and we're seeing some bullish candlesticks pop up. So on the 1 minute time frame, you'll see here we have 1, 2, 3, 4, four bullish candlesticks really popping up here. If we look on the 3 minute or 5 minute, you'll see this indicating a possible trend reversal. This bullish candle is overtaking this bearish candlestick here, and we're getting a potential move up. We are also oversold on the RSI on the 1, 3, and 5. So usually the RSI does want to come back from this. We also have a divergence on the RSI. So this is kind of double bottom on the RSI while this is going completely downward. So these are all things to take into consideration if we are looking for those limit orders there. So if we are looking for a limit order here, I have a lot of different confluences matching up for my trade, right? As long as we break through this opening range breakout with good displacement. By good displacement, a strong bullish candle through this. So we don't want like a wick on the 5 minute candle. A lot of times we'll get a wick through this opening range breakout and it'll just come back downward. Go with the trend, but we want a candle closure above this opening range breakout on the 5 minute. So I am just going to go ahead and play this forward here. So as you can see, we are getting some displacement on the 1, but it is very important to check the 3 minute or 5 minute in order to ensure we are getting enough displacement or a nice strong bullish candle through that opening range breakout before taking the trade. Meaning we are waiting for a candle closure here. So let's look to the 5 minute. You'll see we also have a nice bullish fair value gap forming down here for maybe a possible entry. So if we move back to the 1 minute here, you will see we are getting some downward momentum. Yes, I know I'm drawing my fib a little bit backwards further on. I understand this is just how I draw my fib with my plays. I'm usually looking at the 0.618, 0.5 for entry. What's cool right now is our 0.618 actually lines up perfectly with the opening range breakout. So these are a lot of confluences coming into play that this could be a potential reversal play here because we have a change of character, bullish fair value gaps. We broke out of the opening range breakout pretty good on the 5 minute candlestick as we saw. So if we look at the 5 minute, we're breaking out above that. It could be still closing. I'm in replay mode, but always wait for those candle closes. So I'll play a little bit forward. You'll notice we are coming back down. So you'll see this 5 minute candle did close above the opening range breakout. We do have somewhat of a wick on it. So we did get some displacement. It does appear like we are wicking through the opening range breakout on the 5 minute. We can even drop down to the 3 just for added confirmation. So we did close above on the 3. So we're dropping back down now. So this to me would be a good indication to possibly take a limit order. Why? Because I have a lot of confluences lining up with this play. I have a change of character. I have opening range breakout displacement on the 5 minute. I also have a 5 minute bullish divergence. So this guy to this guy while this is going down. I also have a bullish fair value gap down here. So a lot of different things are lining up where this to me is looking more like A plus setup as opposed to something I'm a little more uncertain about. So I could set a limit order at this price at the 0.618 at 144.60. And we're just going to simply aim for our 1.272 level. Why? Because our 200 EMA is right there. A lot of times it'll come up, touch this 200 EMA, and then maybe just follow this short trend back down. So this is where we would place our limit order, right? We'd set our take profit level at that 1.272 or that 200 EMA area. I'll probably match it up with this bearish fair value gap here and our stop loss right here as well. So if our limit order's set there, go ahead, press play, come back up, come back down. And then finally, we hit our take profit level right there. It actually comes all the way up to our 1.618 level. So this could have been a lot more profit in the trade. But had you set your limit order there, risking $100, you would have a $200 profit. If you risked $500, you would have a $1,237 profit. So that would be trade one there, setting your limit order at that 0.618, making sure your stop loss is in the correct position, everything like that. We had a lot of different confluences lining up. Like I said, more confluences is not always better. I just know what I am personally looking for. If it's a reversal trade like this, we're usually looking for a change of character, a bullish fair value gap, a strong bullish candlestick pattern. We even had, I wouldn't say like a 1 minute divergence is that great of a confirmation, but if we have a 5 minute or 15-minute divergence, that is usually additional confirmation that we are probably reversing to the upside if we are in an overall downtrend. So those are the key confluences I look for there when placing a trade like that. So that would be considered an A+ setup, probably more than likely a limit order trade, especially since we broke through this ORB on the 5 minute. And usually I'm checking the opening range breakout on the 5 minute, making sure we're getting a good candle closure over this 5 minute before we are entering a trade. Because a lot of times, like I said, this could be a total wick through on the 5 minute and just tank back downward and follow this short trend. So we need to look for displacement here. So if we look at the same trade here, right, you can even wait for confirmation. So if we saw this on the 1, since we are currently looking at this on the 1, you'll notice we did come back down into the opening range breakout, which sometimes can touch the bottom of this and we would be stopped out here. However, if you wanted to wait for that price action confirmation, maybe more of a conservative level, we could certainly wait instead of entering a limit order if you are uncertain where to enter a trade. So maybe instead of entering right at this 0.618 because we got some downward momentum, maybe we're waiting for this second bullish candlestick to break through. We already got some displacement here, but if we for sure come back up here, we can set an entry level just right here at this candlestick closure. And this is a pretty bullish candlestick on the 1 minute because there are no wicks on it. And you'll notice on the 5 minute as well, this is our second displacement candle. So we have a second candle kind of coming over that opening range breakout, which is something we're looking for. If we're looking to do more of a confirmation or more of a conservative order, we can set our entry here instead. Are we getting the best entry like we did down here? No, certainly not. But we can aim for those higher take profit levels. So maybe we wait for a second displacement, a second candle closure on the 1 or 5 minute. We're taking our long here. So our entry would be just on this candle close here. Probably it'll come back down. Sometimes it does just shoot up and run up without you, but that's where you can set your entry price, or you can simply mark it in. And then we are looking for possibly the top of this range, the nearest swing high, or even this resistance level here to take profit. You'll notice we have some resistance at this level here. We saw it come up and hit our 1.618. Instead, with these confirmation orders, we are going to be looking at this possible entry instead that lines up with this resistance / support area and looking for entry there. Does it always come down this nicely? No, sometimes it just shoots up without you. So that is kind of a warning there. Now, where does our stop loss go on this? So we have displacement here. Our stop loss, we would actually move to the next fair value gap. So we have this 1 minute bullish fair value gap here. So we'll just trail our stop loss kind of up with these 1 minute fair value gaps. So here's this 1 minute bullish fair value gap, and we'll put our stop loss just below that. If we're coming back down into the opening range breakout, that's probably not a good sign and it could just flip on us. So usually we're trailing this stop loss. I do prefer like a 3 minute or 5 minute. So we do have a bullish fair value gap on the 3 minute here. So you can put your stop loss just below that 3 minute fair value gap candle right there. That's usually my preferred stop loss area, is on a 3 minute or 5 minute fair value gap candle, which we are getting right here. The 1 minute, you're going to get faked out a lot back and forth, but the 3 minute and 5 minute are usually a lot better there. So you'll see, because our stop loss has moved up, our entry price has also moved up, right? But we're still at that 2.33 risk to reward. And once again, you can look at those 1.272, 1.618 levels. So if we are looking at this, right? Here's our entry price. Here's our 1.618, which funny enough, lines up perfect with this resistance area. So you need to pay attention to these resistance areas. If you have candles or wicks coming down into these fib lines, a lot of times you'll get resistance there. The other thing I look for take profit levels are off to the left are previous fair value gaps. So we had a bearish fair value gap there that we're actually wicking into on the 1 minute. We can check the 3 minute and 5 minute time frame. So we have a bearish fair value gap there. I would for sure probably be aiming for that 1.618 level had I not already taken profits at the 1.272. Same with the 5. We have a bearish fair value gap here right at the 1.618. These are all kind of the confluences. Once again, you can wait for confirmation, or you can simply set up that limit order if you're comfortable doing that and take that entry there. But with the confirmation orders, you will be moving your stop loss up to the next fair value gap candle area. So let's actually see how far this goes up, because I can't remember if it goes up further or not. So getting in around that resistance area, see it, we do go up almost to our 2, but right now, pay attention to this on the 1. Like I said, 1 or 2 divergences are fine on the RSI, but when you're getting multiple on the 1 minute, like this is something to be concerned about because it can just tank on you. This 1 or even 2 on the 1 minute usually just indicates a pullback in the trend, not so much a divergence as compared to the 5 minute or 15 minute time frames. But if we're getting multiple like this and the divergence is getting wider, we can probably expect possibly a change in the trend of the direction soon. So does end up hitting our 2 level area. You'll notice though, our price action is getting weaker. By that, I mean, we're getting more wicks on the candles, right? The candles are getting tinier. The price is probably moving slower up on this area. And now we are actually coming back downward. And if you are out of this trade now, you probably should be, just because this bearish candle here is overtaking the top of these candles. And that's kind of signaling to probably get out of the trade here. So if you wanted to trail up your stop loss as well, we can certainly trail up our stop loss. So here on the 3 minute would be our next bullish fair value gap candle. So maybe your stop loss is no longer, maybe you think it's going to go higher, which we're getting a double top up here. We're getting some bearish candles to the downside. I would probably say it's not going higher. We're getting a bearish fair value gap, all the things signaling to get out, but you could certainly maybe trail up your stop loss. Here's our next bullish fair value gap we're just trailing our stop loss up with. So if you wanted to trail up your stop losses, you think it's going higher, you can certainly do that on the way up as well. These entries and exit models are all things I look for when I am trading. You guys feel free to take note of this. This would be considered more of a reversal strategy, right? Because we're in an overall downtrend. I'm usually playing on the 1 minute and then looking for confluences on the 3, 5, or 15, something of that nature. I do go over other 1 minute scalping strategies I'm usually looking at on my channel. Now, if you are interested in learning more about trading, I do have a full technical analysis mastery course. I go over trading psychology, Discord alerts, setting up your Perpetual futures account, candlestick patterns, chart patterns, Fibonacci, drawing trend lines, how to read MEXC, RSI, change of character, order blocks, Elliott wave theory, so on and so forth. These are all kind of the principles that got me really good at trading and the ones that I really believe in, as do a lot of other people. Really, you just need to learn how to read a chart, and that's about it. There's no fancy, pricey indicator that's going to do that for you. So really, it's just about learning how to trade and learning how to read the chart. Also have trading strategies available on either end, and then getting into some long-term analysis as well. I do also live trade Perpetual futures every day, unless I have family things going on. I trade in the morning from 8:30 to 10 a.m.-ish Central Time, and then 8:30 p.m.-ish to 10 p.m.-ish Central Time. They all are recorded and available in the WAP as well if you're not able to make it. But I used to watch live trading all the time, just really help me gather the emotions, gather what's going through people's brains to actually learn how to trade as well. So if you guys are interested in that, did want to bring it up, Discord is available as well with trade ideas. We have live trading, opening up mentoring as well, just going over some core principles and ideas, the overall crypto market, what we can expect to see from the crypto market and everything else, trading books, the full-on course and everything like that, as well as some smart money wallets to follow. Anything and everything you kind of need to get yourself started. But just wanted to lay it out there in case you are interested. If not, that is okay too. If you have questions, drop them down below. I will be sure to answer them as always, and I will talk to you later. Thanks.